presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Hi, folks. Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show. This is the last hour of a trading day that says the VIX index is up 20%, up 3.57 at 21.09. So this is absolutely fascinating. So let me go to this chart quickly. Basil Chapman here. I'm the host of the Tiger Technicians Hour at 10 o'clock every market day. And the opening call is my daily newsletter. And let me show you something that I had to wait, unfortunately, to see whether or not we would turn down today. But I've been speaking about this for a little while, that I have a technique that I call the Chapman Wave Dark News Cloud Cover. Basically what it says, I use the Dow chart for this. If I see that there's going to be maybe very high interest rates, or whether there's something in the economy that's going to affect the market, I put a little rectangle in, I'm monitoring, and I look for internal highs and residual highs. The internal high is where it's like an earthquake, and then the residual high can be either below, exactly the same, or worse than the earthquake. And then on the downside, I call it the internal low, and the residual low could be less, it could be worse, it could be the same. In this case, I was waiting for this trend line. You see this beautiful up channel, just the simplest of tools, a trend line. One line goes to all the highs, one line goes to the lows, and it's parallel. I love that. And within that, you get resistance level, and I think we might have hit this is an internal high that was made here at 48,040 back in October. Now we're into November, and the 12th yesterday, I think we might have made a residual high. Now, what's fascinating about this, it used to be that when we made the residual high, like back in January of this year, we made that residual high in February, and we came tumbling down from the, where was that? That was, I think it was at the 45,000 area, right down to the 36,611 low of April the 7th. However, this is a little different. You see what's happened with each one of these? We've only pulled back a little bit and then gone right back. The 9-period moving average is being green, and it went pink just briefly back in the beginning of October. And then all of a sudden, look, it's green. Even with this move today, you've got a green 9-period moving average. I'll talk about that more when we come back, because there's a lot to discuss. So let me go through these things. So I did that in the update. I guess I got to do it again. So the Dow right now, INDU, is down. Oh, I always do that. I go to the wrong chart. Got it right there. INDU. The Dow is trading at this particular moment, trying to bounce a little bit. It's down 778. But look at that candle. Look at that red candle, strong red candle. You see this? Oh, you can't really see it. Maybe I can. I'm looking at Tiger TV. Yes, you can barely see it. There's a green 9-period moving average over there at 47,476. There's another one at 47,000 right there. The black one, a 14-period moving average of 47,382. We haven't taken that out yet. I'm anticipating we're going to take that out. But look at this. It's still positive. The MACD, the moving average, is still positive. The on-balance volume, whoops, that's the blue line there, is very strong. The relative strength indicator did rally, but it didn't rally as strong as it did to the high that was made on the 29th of October. But the stochastic is under 80% to 72%. That's just like a warning to say a digestive moment is coming. And this is so fascinating. In the Chapman Wave methodology, we're always looking for a peak D, the fourth highest peak, because other things can happen at a D. That means you identify the low and you go peak A. If it gets upgraded from a buy signal to a buy mode as it passes peak A and goes to leg B, invariably you say, okay, that means it could still go to a D. Well, lo and behold, we've gotten to a D right here in the weekly chart. And it's gone into the inside track repellent zone. And the 9's over the 14, the price is over the 9. The MACD is still strong. The relative strength, this gray line, is strong. The stochastic's fabulous at 85%. The unbalanced volume, the blue line, is pulling back. So that says we've got to do one thing at a time. Let's just talk about the daily charts for the moment. We have to wait for Friday's close. Anything can happen on Friday. All right, so now let's go to this one step at a time. The S&P already made its high, but fascinatingly enough, it made its high in look at this. In September, the Dow made a high, but in In October, the S&P made a high of 6920.34 on the 29th. Now, so far this month, we haven't gone above that by 1 penny to extend the leg A. And the Dow has. So that's very interesting. I don't want to talk too much about it right now. I'll do that in my show tomorrow, Technical Friday, 10 o'clock a.m. And let's go through to the other indices. QQQ, what did it do? It made its high in October. So we've already started December with a lower high, meaning we could start to make a peak A. That's going to be something very important to monitor. There's the arch formation. Let me show you this. I don't want to take too much time on these techniques because I'll do that in my show tomorrow. But this is called the dreaded H, where it comes down sharply and then it arches over at a peak A or a B and then takes out the left side low. It hasn't done that yet. But if it does, and it does it very sharply, then you're looking at the 590 area for the QQQ. Not only that, the SMHs, and I've been looking at so closely at the SMHs, looking at this pattern that there's that resistance. It's arching over. It's done it once at a peak A and failed, dreaded H, again there and again there. A, each one's an A, and it keeps coming down. If the SMHs start at, they're at 342, minus 12. If the SMH, the semiconductors, go underneath this low of the 7th of November, 336.68, you can anticipate that it's going to go down into this area in the 330s. So this is very important to have some quick turnaround to the upside. Well, is that going to happen? We'll have to watch it carefully. IWM, very, very ugly. It's gone underneath the left side low of the 7th of, I think, November. It's down 7.25 at 236.39. Not looking good. And it's already made a peak E in the weekly chart and is starting to pull back. So with that said, let's just go to the GDX, the gold index. Made a leg, very sharp move up from the 68 area to this, just about to touch 80. And today is trading at 77.18. There's a lot to discuss. Look at the Bitcoin. Bitcoin, ugly. I've been warning about the 97,000 area. I'll be back. Basil Chapman sitting for Tommy O'Brien in the Tom O'Brien Show. See you in a few minutes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstaddt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and we're looking at Bitcoin down 3,540 at 98,250. I better just show this pattern because it just makes it so clear. I look at three core patterns: straight up, straight down, cup formation, arch formation. Cup formation means you're going from one point down and then coming back again. So it could be a V, but it looks like a cup or a V. And an arch says you're going from one point up and then coming back down again. If you use this and you come down and then you rally and the price only goes to a peak A or a B, and then it fails and takes out that left side low, how deeply it takes it out means if it's quite deep, you can actually go one-to-one from the arch high to the base on the left side, the back of the H, to the downside. We've already done that, some part of it. Look at that big H pattern right there. Then there's another H pattern forming right now. It's not great because we've taken out all those support levels. The next support level is where the 9-period moving average crossed positive, and that's the low that was made in the week of the 9th of May at 97,960. And I've been saying 97,500. Close below that. I think that's a really big problem, more meaning weeks before you turn around. It can turn around, but it'll take quite a while to go. So for subscribers, we've been long the IBIT for quite some time. That's the iShares, but we've taken a lot off, and we might just be stopped out of with a very nice profit with all the gains that we've made. But this is really, let me look at Ethereum. Look, Ethereum's the same thing. Oh, what did I do? I typed it somewhere. There it is. Okay. Ethereum, ETH, and Ethereum's the same thing. Look, dreaded H, is it going to take out the left side low? Probably yes, 29.45, under the 200-period moving average. So look at this pink 9-period moving average hinting towards the softness of this particular instrument, grayscale Ethereum. Hey, talk about pink. Look at this. Since the E-mini, since it crossed negative, that was 3 p.m. That was 3 a.m., 3 o'clock this morning, and that was about 68.90 in the S&P. Look, it's been pink all the way through. It kept you in the short position all the way through. Now, I made a mistake for subscribers. I really toyed with it, and then at the last minute I thought, I've got to wait for that. You remember I showed you just a moment ago this particular chart. I said, I really have to know that we're going to turn down before I can talk about this Chapman wave internal high and residual high. And if we get that, you can expect. So I meant to go, we were about to go short the Dow 3 times short, and I just lifted it, which is a pity. It would have been a nice 4% gain amongst all these stocks that are moving down. So let me just show you a couple of things here. The TLT, which is the Lehman 20-year Treasury bond ETF, is turning down, meaning that rates are actually going higher. And you can see that in the TBT because here are the rates. And it made a peak C. Is it still going to go to a leg D above 33.95 into the 34s, 3.4%? It looks like that's a possibility, pushing off the 31.69 low that was made 4 weeks ago above the 200-period moving average now, tackling the pink 9-period moving average. I'm watching this very closely. And with all the layoffs and everything, you wouldn't think that that would be the case. You'd think the lower rates, right? Well, this is going to be quite something. So we're looking at, I had a question about the housing market, HGX. Look at this. Making a lower low in this H pattern. Look how many dreaded H's there are. H, and there's another one. And the weekly chart is the 9-period moving average on Friday, last Friday, went pink and it's still pink. And that's just not a good sign for the Philadelphia Housing Sector Index. I want to go to, did I do GDX? Yeah, GDX did have a very nice spike to the upside. The 9 is over the 14. That's a positive. The MACD has turned positive. The relative strength is increasing. The stochastics at 90%, and the on-balance volume, the blue on-balance volume, is actually very good. It's just pulled back today with the price. So I'm looking at this and I'm saying, this is holding very well, considering that gold, usually you get some parallel motion between the GDX and the gold, but sometimes the GDX lags, but they're kind of in sync right now. And here again, so I'm looking at this and I'm saying, if there's a financial, and we go to the XLF just for the moment, XLF, the S&P Select Financial Spider Fund, went to a peak C yesterday because today's down. So far, the technicals are pretty good, and the weekly chart is pretty good. But look, the 9-period moving average is getting closer and closer to the black 14-period moving average. If there is a slide in the XLF, right now it's down 74 cents at 52.94, below 51.50 in the next few days, that's going to be a problem. I'll show you something else that I'm watching very closely. There's another technical tool that I developed, and look at this. This is the monthly chart. Oh, I meant to retype it. This is the pink is the XLF monthly, and the blue is the S&P. This is the SPY monthly. Look how perfectly all the tops have coincided and all the bottoms have coincided. Well, we made a top right there. That was in March. We pulled back. We went to the April low, and look what's happened. To the exact month, we've made highs, and now we start to make lower highs. I don't know yet whether they're going to be lower lows, but that's what we're watching. So if in the month of November, if we start to make a lower low than last month in the XLF and the SPY, and it's really close, that's going to suggest to me that finally this beautiful index, and look at the way it made a 1-to-1 measured move from here. This is March of 2020 to the high of January 2022, and then down to the low of October of 2022, back to this high right here, the high of March of 2025, and then this April low. Look, that is a 1. I haven't got it on this drawing. I had it before. 1-to-1, like A to B equals from there C to D. Then it pulled back, and there's like a little coda pattern that went higher. That's what I'm watching. So this is November going into December has to save the day, because we've had some fabulous moves. And now what are we looking at? We're looking at some sectors. Look at this, General Motors. Where would General Motors be in a day like this when the Dow is down, 835 points? Where do you think General Motors will be? General Motors is at a new high. It's down 13 cents, but it hit 72.87. What about the IYH, the healthcare ETF? This is the iShares Healthcare ETF, and it's trading at a new high, not an all-time high, but a recovery high. All-time high was 66.59. This is 64.33. So you are seeing some strength. Look at ExxonMobil. ExxonMobil going to a recovery high yesterday, 2 days ago, and still holding very well. Very mixed market. Look at Robinhood. Down sharply, down 12 at 128, 153 just in October. I'll be back. Basil Chapman for Tom O'Brien.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. We're back. Basil Chapman sitting in for Tom O'Brien. This is the Tom O'Brien Show, and Tom is out. He's actually in Boston area this weekend. I live in the Boston area, so hopefully I might even get to see him if he's not too busy. The Oracle newsletter is what we're going to be discussing right now. Let me pull this across, and I believe we have Tim Ord on the line. Hi, Tim. How are you?
Good. How you been? So it's been a couple of days. So,
yeah.
So quite a bit of changing.
I just wanted to mention the Oracle newsletter. I got it on the front page. You could check it out. I went to Oracle newsletter, Googled it, and it popped right up. And here is the man himself, Tim Ord. Tim, can you fire away with all that information that you've got for us?
All right. Well, we're heading into the year end, which is basically favorable seasonality going into Thanksgiving, which is a couple of weeks away. And then after that's Christmas, which is, a good month or so away. But usually this time, seasonality is bullish. And we got a chart here. This is our first chart. Oops. For some reason there's kind of a few things going on here. If you notice this low right here, if you do Fibonacci retracement compared this low to this low, the market rallied up all the way up to here and retraced.
Just for 1 second, I need to stop. We're looking at a chart, folks, that has the SPY on it. So Tim's talking about the SPY.
Yeah, I'm sorry. Yeah, this is the SPY. It's a little bit messy, but there's potential. This could be a topping pattern. I'll put it that way. And so this is kind of a preempt. I'm bullish all the way into year end, possibly into January. So this pattern may take another couple of months to play out. But this is the SPY. When I'm thinking about this pattern that may be forming is the 3 drives to a top pattern. And a 3 drives top pattern, here's top 1, here's top 2 up here. The market's pulled back 6.18% of the retracement, which is deep retracement against the previous rally up. And what I'm expecting now, we're down actually here, but I expect the market actually go up and hit a new high. How high? As high as break above the October high.
So just are you talking about a time frame that you're looking for?
By year end, I'll put it that way.
Okay,
so, good. Could be year end. I got shaded pink areas right here. The reason why they're shaded pink, that's where the trend came in at 1.20 or higher. I pointed out those trend readings in that area. Normally when you get into a tan area and the trend readings are above 1.2 or higher, that shows panic in that region. And normally when you go back into it, you get panic again, and that suggests support. The market actually has pushed down a little bit lower we're into actually the support region down in this vicinity right now, but I still expect this market in general is still going to work higher. We're going to hit a higher high sometime probably in December, and that'll be the tell story. What I think is going to happen here. This is 3 drives. This is what I'm thinking is maybe developing is a 3 drives to top pattern, and trying to find my deal here. But anyhow, the market rallies up, then retraces at least 61.8% of the previous up leg. This is supposed to be 61%. That's supposed to be a sixth. Then we rally back up to a third high, and the third high is the top. And once you reach a third high, if you break the previous high at a lighter volume, it predicts the market will pull back down to where the pattern began. And on the SPY, it'd be around the 650 area, 650, 655. We think that's a possibility that this is pattern forming. It's not complete yet. We have not hit a third high. I think that's still in front of us, but I think there's a good chance we may hit a third high. And the third high will predict if the market is drawing that 3 drives to top pattern. And also VIX, if you notice here, as we're hitting higher highs, the VIX is actually making higher lows. That's usually a bearish sign going into You want the VIX basically at least break even compared to the previous highs. But if the SPYs start making higher highs and the VIX is starting making higher lows, then that's a bearish development. That's exactly what's happening here. If you notice this high right here, which is basically, this high right here is, even though the S&Ps are higher here, the VIX actually is making higher lows, and that's a bearish divergence. So VIX really should be making lower lows as the S&P is making higher highs. We don't have that. So we have some bearish, we got bullish seasonality all the way to year end. I'm expecting a new high, but these are kind of warning signs. We are long on the SPX right now, and I expect we'll break to new highs, and we'll see what happens when new highs are made. There's another chart that actually is kind of worrisome too. Last October, as long as the S&Ps are making higher highs, which it has going into October, and the volume is higher than the previous month, that's a bullish continuation. And normally, as long as that scenario, you're making higher highs and higher volume, the market in general, that's a bullish confirmation that the market will keep making higher highs. We haven't touched a new high yet this month above the October high. But for instance, if volume comes in, significantly less than the October high, and volumes say at least 10% less, you make a new high in November this month, and volume is lighter, then that's another worrisome sign. So you have a VIX making higher lows as the S&P is making higher highs, and if you have a volume that's not making a higher volume than the previous high, even though the SPY is making a higher high, that's, again, a bearish scenario. So there's some things that are kind of setting up here that may lead to a top of some sort. So, but for instance, if November goes on to make higher highs and the volume actually makes higher highs in the October volume, or at least an equal volume, that would be bullish. Then that rally would continue higher. So this is a possible setup. I'm kind of early in the game. This is going to happen or not. We have to hit a higher high for this scenario to develop, which I think we will. If we don't hit it in November, we'll probably hit it in December. But at some point, the market usually does not make higher highs and higher volume. At least you go back up and retest the previous high. So at some point, we are going to test the October high. So.
Well, okay, that sounds great. We'll be back with Tim in a moment. We're going to take a break. Basil Chapman sitting in for Tommy O'Brien. And we're looking at the Dow. Look, here's the E-mini right now, trying to get back to that 200-period moving average of 671. It says 676 right now. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, Basil Chapman sitting in for Tommy O'Brien, and we're looking at the Dow down 728 and the S&P down 106. We've got Tim Ord on the line from Ord Oracle. Tim, could you continue, please?
All right, let's look at the gold market. This is the bullish percent index for the gold miners index / GDX ratio. It's a weekly time frame. I showed this chart last week. A couple weeks ago, we got a buy signal. The buy signal is generated when the 10-period RSI falls below 25. So that's pointed out there. That's come in late October. We got that buy signal. And I went back. You can go back a lot further. This chart is easier to see where those buy signals came. The bottom window is the GDX down here. This is GDX here in this window. And so they're all pretty good. Sometimes you flip sideways for a little bit. Sometimes you come right at the bottoms. But anyhow, it was a good signal. Now let's go on to what's happening now. So we're rallying up. We had 3-gap play to the downside. GDX started back in October. That was completed late in October. And now we kind of rallied up. We actually had some pretty good volume days. One was yesterday, and another one was, looks like that would have been Monday. Anyhow, we're down today, but I don't think we're not pulling back much. I think in general we're still going to work higher and get back up to this high, which is around the 85 range, give or take. And I think that's going to be resistance up there. We're not too far from a big gap. I pointed out that area, that volume right there formed on this day right here. And that's the reason why I have a gap there. If you test the gap on a lighter volume, it could be resistance. And chances are we're going to test that gap on lighter volume. So I'm thinking that gap's going to be resistance, and that we may start a trading range. What it looks like on a there it is. On a bigger time frame, this is the GDX on the monthly time frame. Monthly GDX goes back to 2016. And anyhow, what I'm thinking is going to happen, we're going to run up to that gap. Gap's going to be resistance. We're going to come right back down. So in general, if you test a previous high on a lighter volume or a gap on a lighter volume, if you can't get through it on higher volume, you reverse and attempt to take out the previous low. Well, the previous low is basically the previous low we just came off of in October, which give or takes around the 70 range. And so I'm thinking we're just going to flip sideways here in GDX and build a trading range. How long a trading range? Could last several months. So we're due because, basically the market's been pretty much rallying all the way from 2023, really. You couldn't quite tell it until 2025. So we're due for a multi-month consolidation. So not a top of any consequence. I don't think we're going to go deep against the previous uptrend. I think we're just going to find support around 70, give or take, in that vicinity, and build a trade range and go sideways. And I think go sideways for, I think could be next year. I pointed out in the, hold on one second here. The volume, here we are. The volume last month came in at 364 million shares. So that's a heavy volume day. So if you test that high on 10% lighter volume, that high is going to be resistance. So you got a couple of things going on here. You got a daily high volume down day that created a gap, and on the monthly time frame, you got 654 million shares, which is a pretty high volume. That volume goes back quite a ways before that volume could be matched. So that's the reason why I think there's just a trade range. What that says to me is, I think the big stocks, the Newmont Minings, the AEMs, whatever, all those big stocks will consolidate along with GDX, and the second tier stocks will start to perform. I've been saying that for quite a few months or quite a few weeks now. I think that's what's going to happen. I think the second tier stocks are going to come to the forefront. And so the bull market's not over. The bigger trend is up, but I think a multi-month consolidation is likely here. The bigger trend, if you notice, this is the first time we hit RSI up in the 70 range, going back to, looks like about 2001 or 2000's first time we got above 70. So this is a breakout to the upside on the RSI. This is what they call initiation of an uptrend. And we talked about, this is on a monthly time frame. We talked about the Zwag breast thrust indicator. A lot of times, especially if they come off of bottoms, you see a big thrust on the Swag breast thrust indicator. That says that's initiation of an uptrend. Well, the monthly charts can do the same thing. I use the RSI on this, but this is initiation of a month on a monthly time frame to the upside. So XAU probably have started a multi-year rally. You'll see some consolidations along the way. If you look back in this period here from 2000 to 2011, whatever, you had some consolidations along the way. I think we're hitting one right now, but I think this market is pretty much just going to go sideways here for a couple of months before it breaks up again. So this is probably a 12-year cycle, and so I think this bull market in the gold stocks and actually the commodity market could last over the next 12 years, because the commodity market is also breaking out to the upside. That's like the energy stock or the heating stocks, gasoline stocks, whatever, energy stocks. They're probably going to lead the way to the upside here, along with the precious metals and all of the other
that's an inflationary call, right?
Yeah, that's what it looks like. It's going to be similar, something like 2000 to 2012. So even though Trump's going to be fighting, the gas prices, I think it's already playing out that and the gold stocks is going to be inflationary. So it's just a 12-year cycle. He'll probably try to fight it, but I think the market's already playing out that on a bigger time frame, this is initiation of an uptrend on a monthly time frame. So on general, this middle chart I've talked about, this is the monthly XAU to NDX, which is the NASDAQ stocks. And have the RSI, basically the RSI is probably going to stay above 50, trade between 50 to 70 over the next 12 years, where the gold stocks will outperform the NASDAQ stocks. So it'll be interesting how that plays out. But this is time to be in gold stocks. It's been miserable over the last 12 years, and that has changed in 2024. And so a lot of these penny stocks and the gold stocks will probably be at some point $5, $10, $20 stocks. So we'll see how that plays out. But that's what it looks like in the coming future here. So yeah, we're reaching an inflationary period.
It's a great perspective you gave us. So, folks, I just want to tell you that this is when Tim says XAU, that is the Philadelphia Gold and Silver Sector Index. Hey, thank you very much for that. It was very informative. We always appreciate it, Tim. And we'll speak to you on Tuesday coming up. Have a great weekend.
All right, you too. Thanks a lot.
Thank you very much. Folks, this is Basil Chapman. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting for Tommy O'Brien. I had a question about some of the techniques that I just demonstrated live. So this is, look, here's the 1-minute E-mini chart. Look at this. I'll squeeze this so you can see. How important is the 200 period moving average? This is that thick orange line right there. Well, you don't need it when you don't need it. It's just like a sign on the road. You don't need it until you need it. Look, it was resistance all the way from, I'm just going back to saying 8 o'clock, 8:30. And look at that. Kept failing. Each one of the bounces, even this little last bounce. And look at the patterns that we're talking about right here. Let me just show you. And I'll do more of this in my Tiger Technicians Hour tomorrow, which is Friday, where I do more detailed analysis using the technique itself. So I didn't have a chance to do this because I was talking with Tim, but here's a technique that I like to use. If I wanted to do a measured move from left side to right side, the same number of bars could equal a test as a possibility look at this. I don't know if it'll do that, but this is normally what I would draw in. A 1 minute chart, doesn't matter. It could be a monthly chart, 1 minute chart. They all do the same things. So look, it's just testing the left side low of 320 this afternoon. And we'll see. So far, it's bouncing off that level. And within that, there's what I call Chapman wave inside wedge target repellent line. Look, goes right there. And it's bouncing off that. So that's the one technique. Here's another technique. When the 10-minute crossed negative, the 10-minute crossed negative way back, this is the E-mini. It could be anything. Way back, well, I'm talking about from when we were here during the market hours, but let's just say the 200 period moving average. Look, it got repelled. The E-mini got repelled, and to this minute, from the time it went negative, pink, that is at 68.87. Here we are at 87.56, and that pink line has not yet turned positive. So check out my opening call daily newsletter. Have a wonderful evening. Tommy will be back, I believe, tomorrow morning, and have a great evening.